Captains of Industry, brought to you by Airtel.
India and South Africa in particular have very strong historical ties. It's a history that stems from the era of independence in India to support of liberation movements in Africa to partnership in the non-aligned movement, and today equal opportunity through the elite league of Brazil, Russia, India and China. India's profile on the continent is also growing with investments somewhere in the region of $33 billion, notwithstanding the impact of the global financial crisis. So as the geopolitical environment changes and emerging markets come to the fore, everybody's wondering what kind of new partnerships are going to be emerging from India and Africa, and indeed other new markets in Asia and in Latin America. Joining us now to talk about his perspectives of a changing world order is the chairman of the State Bank of India, Mr. Pratip Chaudhuri. He's our captain of industry tonight. Thanks so much for your time. Now, obviously, everybody's looking at the changing world, where India fits in the changing world, the growing dominance and the growing voice of India in fora like the United Nations, the World Trade Organization. What does that mean to you as a leader of a leading financial institution in India?
See, India has been a thought leader in many ways. So many of the early civilizations emanated. But between the time from 1000 AD to 2000 AD, I think we lost our leadership position. So it's not dominance that we would look for, but it is like, leading the country, leading the world with a vision to create something which other people would be happy to emulate. So India is in a big transition from a struggling country with very low rate of growth, what was called the Hindu rate of growth. India is now consistently posting significant rates of economic growth, and which is making a lot of difference to the socio-cultural life of India.
I mean, India is now effectively the 10th largest economy worldwide, and if you're just looking at purchasing power of the Indian middle class, it's regarded the 4th largest economy worldwide. What's being done tangibly at a corporate level to ensure that India sustains this position?
See, firstly, the goods have to be produced. First, the wealth has to be produced, and then it has to be distributed. So as a bank, we work as an engine for industrial and commercial development. Once we find that the income levels rise, people have access to education, people have access to healthcare, and they become better citizens, and the quality of the society, quality of the citizens improve.
I mean, obviously a middle class somewhere in the region of about 300 million people. So there's a huge market in India, but we're also told that poverty is pervasive in that country. How do you operate in that sort of environment?
Absolutely, because the total GDP is about 1.6 trillion. So Indians save about 30% of that, and 12% goes for taxes. So the Indians are left with about 58% of that 1.6 trillion to spend on. So average levels of consumption in most of the items, be it food, be it steel, be it aluminium, is much less, and we have a long way to go. So looking to the potential, so today the advantage in India is you produce anything or you open a branch, there is never a dearth of customers. Whereas in many societies, you set up a hospital, there are not enough patients. Where you set up a school or an educational institution, there are not enough students. So one thing that Indian entrepreneurs, businesses or institutions never lack is enough demand for their services and goods.
But I mean, it also creates what many people see as an unrealistic business model in general. Because of that high volume of numbers, there's a sense that you operate on high volumes and low margins, because obviously even if you're charging lower prices, lower interest rates, you've got enough people to service the debt to buy the goods. Once you move overseas, it's not the same operating environment. So adaptability is what people are concerned about when they're dealing with Indian multinationals.
To some extent, but the huge domestic market also helps that you can distribute over your costs over larger volume. So if your volume is 100 in domestically and you add another 20 overseas or export, so the additional 20, even if it is higher than the variable cost, you're okay with that, because the huge apparatus that you have created for domestic production is already there.
Yeah, I mean, you've just spoken about national savings somewhere in the region of 30%, and I think this is not just an Indian problem, this is now an emerging market problem. we may have the labor, we may have the market, but we're not having enough local investment. Why do you think that is?
I don't think in India it is so much of a problem, because we have a history of stock exchanges, and in Indian market, in the stock market, the retail participation is pretty high. And what has happened is the number of mutual funds that have come up, both foreign and domestic, have helped channelize the individual savings into the equity or into the high risk. Otherwise it becomes a curse that people have an income, they go and put it in the bank, they earn interest, they again go and put it in the bank. But then where would the entrepreneurs be? But India is lucky that way, that India has generated a large number of, some of the names are very big, but some of them you may not have heard internationally, but there is a huge urge from the people who are in the service or employed to become entrepreneurs.
I mean, we'll talk about that in a second. I'm talking about what lessons can be imparted in Africa about creating a savings culture, about getting pension funds to be more dynamic, about getting capital markets to work well. When you come into Africa as a leader of a bank, coming from an environment like India that in many ways is so similar to the social and demographic environment in Africa, what could we do better?
I think the rule of law, the exchange control, that has to be handled very well, because we should not have, many countries have multiple exchange controls. So that creates different kinds of, favoritism and other things. So you should have absolute rules for everybody, make it clear that what can go in and what can go out. Okay, we could be worried about outflow of capital, but why stop inflow of capital? So why should a person with $5 or $10 or $50 have go to the bank and put his passport? Why can't a shopkeeper accept $5 or $10? So these are some of the things that you do, and put value on education. Invest more in education, and particularly education should be accessible to the largest section of the population. And India is running a huge program of scholarships. So scholarships, to my mind, are a greater or a more effective instrument in raising the people's standard of living and raising their position in the society.
No, I can understand that. I mean, I'm a product of a British scholarship, and it's been so empowering personally. But you'll hear African leaders say, but we commit to education. We are directing funds towards education and healthcare, but it's not translating in new and fresh skills or innovations. We somehow just don't seem to understand what the gap is. What's the missing link?
Well, that's a bit of a problem in India, and I think the way it should be measured is that you don't measure how much funds you are putting into education. You measure what infrastructure you are creating, how many new school classrooms have been added in schools, how many new beds have been added to the hospital, and in what way are they running. And secondly, don't make it free. Charge something which people can afford, because if something is free, if it does not generate enough money for maintenance, the things will deteriorate and people would also not put value. So the cell phone example is the best example, that when you people pay 20 cents, 50 cents, $1, and that aggregation is a significant amount, and the cell phone companies have made it big. Now if a person can spend $10 a day on cell phone bills, why can't he pay $10 or similar amount for clean water or healthcare or education?
Yeah, so it's that kind of personal responsibility element. You spoke about exchange controls, and some would say that, you know what, the Indian economy is rising right now, largely because the government has tended to be a bit protectionist. It's introduced a series of constraints for foreign investors wanting to own Indian assets, and you need a little bit more liberalization to make it a fairer playing field. Is that what emerging markets have to do? They have to look out for their own first?
Yes, they need to open up the economy, but in all forms, not only investment freedom, you need to have trade reforms, you need to have financial sector reform. So when all the sectors have been reformed to a significant extent, only then this investment opening up would help. And even if a foreign investor comes in and then they find that the subsequent rules of pricing are very detrimental, they would be disillusioned and they would send a negative message about the company.
Tell us a little bit more about the State Bank of India. It's said to be one of the top 5 banks in India, but it's also had a fascinating history from the research that I've read, is that it's one of those banks that was nationalized something like twice in the past before eventually becoming a self-sustaining commercial entity. That's another issue we're grappling with here in Africa, is the extent to which the government must control the levers of the economy, the extent to which they should leave it to the private sector. What can we learn from the State Bank?
State Bank of India history, I think we can't go back in history and change it, but we are very happy about the history. It's a 200-year-old history. The Scots merchant came to India in the city of Calcutta and the first bank was set up. Then there are 3 regional banks which are called the 3 presidencies. They were brought together and the Imperial Bank of India was formed. But after independence, our first Prime Minister Jawaharlal Nehru thought that the banks can do much more for the country's development, and in an amicable way. There was no expropriation. The shareholding of Imperial Bank of India were transferred to government, State Bank of India, and the mandate was to spread out all over the country, provide financing to the sectors that had not got financing hitherto, like agriculture, industry, transport. But then when the banks need capital, then it becomes impossible for the government to keep pumping in the entire capital. And just as you mentioned, the State Bank of India was nationalized in 1956, and then the major banks were nationalized in 2 stroke in 69 and 1980. Now we have 20 nationalized bank and State Bank of India, and State Bank of India is the largest commercial bank of the country, having something like 17 to 18% market share. Now, when this realization came that banking is a capital intensive business, so government let go at least the minority shareholding. So in all the nationalized bank, the government shareholding ranges between 50 to 60%. So they are not interfering on the day-to-day matters, but they are also mindful that the bank has to be run on profitable and commercial lines. Otherwise, the shareholders or the investors would not put money in. So it's a combination of both.
I mean, that hybrid model, tell us a little bit more, because, you know, in South Africa at the moment, we're grappling with a very controversial debate about nationalization. The bulk of the conversation has to do with the mines, but the conversation has also started to include the banks, where there are some political forces in the country who feel that for the economy to develop, to use your words, the banks need to make strategic investments in key areas, such as housing, such as rural development, those sorts of endeavors. And they're arguing that the banks are actually helping to support the rich get richer through equity deals and not empowering the rest of the population. So there's a philosophical rationale, but there are practical elements that don't seem to make it sustainable. When you know, given the history that you've come from and the social imperatives of the government and the government using you to solve a lot of those problems, has it helped?
Yes, I think ownership is not the way to target all of that, because where in India, after the banks were nationalized, several new private sector banks have come up. So nobody is saying that the private sector banks do not look after the country enough. Public sector banks do that, but that is done by government mandating that a certain percentage of your credit has to go to agriculture. So whether your ownership is private or public, you have to do that. Then if you mandate that this much amount has to go for housing, so these could be the ways of mandated lending. But at the same time, the banks would not do something if they find it risky. So in India, a lot of other things have happened, like the government wanted to the banks to lend to the export sector. So they provided a guarantee framework that you lend to the export sector, and in case you run into problems, in case you run into risk, you have a recourse to us. So there are other institutions who are doing risk mitigation for the banks.